Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. As you can clearly see on the screen, Dow Jones jumps 700 points after power signals smaller rate hikes. Yes, there was a turmoil in the market. Okay, stock markets have given us a big thumbs up to the decision. As you can see, stocks saw broad gains Wednesday after Federal Reserve Chair Jerome Powell confirmed that the central bank will slow the pace of its aggressive rate hiking campaign that has weighed on markets. So they are going hawkish. So my dear friends, this will have some huge impact on the market. I think the next CPI, the next CPI will also be very important for the market. So DXY has shown massive selling. Okay, and you can see that DXY is trading here. It formed huge candle, huge red candle, and ultimately trying to survive again above the crucial support of 105.30. Right now DXY is standing at 105.65, and you can see the previous recovery is gone right now. Stock market is on the party mode and DXY is somehow still trying its best to survive. So in this situation, there is a possibility that the selling pressure may continue and DXY may break the support and go down further. Okay, so my dear friends, in case DXY starts going down also, do not be too hopeful that there will be a recovery. Observe the market first, then only come to a decision. There may be a small bounce from 105 level, 104.90 level, but it may not be a trend reversal level. After all, we have seen that Fed has confirmed that their aggressive stance on the rate hike will change. Now let's have a look at the chart of gold. This is the chart of gold and we saw a massive up move on the chart of gold. Just look at the up move here, sharp uptrend. And gold is standing at 1776. It broke the resistance of 1763, 67 and right now taking some rest here. So the previous resistance level is no longer valid and this will be the new support for gold. As you can clearly see that the next resistance is 1785 to 86 for the gold right now, and I think that by tomorrow gold will be heading towards 1785-86 and this will be the resistance for the week. Do not forget, tomorrow NFP is coming up, another crazy event that will bring volatility to the market, so please be careful tomorrow. So I think 1785-86 is the next resistance for gold. So before NFP, before NFP, if you see gold going up, then observe the market around 1785-86 as it was a very strong resistance previously. So we can expect the market to reverse. We can expect the market to show some price rejection from above. If we get a similar picture like previous times, we can consider taking a sell position. But to be honest, be careful. If the same amount of buying continues, then obviously market will break 1785-86. So your observation will be very important. So when gold will hit 1785-86 level, observe how the market has approached the resistance. Try to understand the body language of the market. If you see that gold has reached 1785-86 level, forming small candles, small candles, it means that market wants to take resistance. Market is getting resistance, market is receiving selling pressure. So as a result, you can expect the market to reverse from 85-86 level. So the size of the candles will play a big role. In case you see the market has reached 85-86 level, but the size of the candle is like this, obviously then you should avoid taking a sell position. After all, no level is permanent in the market. Try to understand the emotion of the market first, then only take a decision. Okay, so if you see market has the intention of reversing, then only take a sell position. But if you see the same amount of buying power, okay, around the resistance, then you should strictly avoid taking any buy position around the resistance. If market reverses, then only go for a sell position. And on the other hand, if market breaks the previous high here, the previous high of 1780, okay, if market breaks the previous high of 1780, and if you see a good amount of buying, then also you can consider taking a buy position. Okay, but yes, market should go for a breakout. Okay, at least you can expect the market to reach 1784.85 level. Okay, so this can be another trading opportunity for you if market goes up. So first opportunity is if market breaks 1780 level. Okay, 1780 level with good amount of buying power. If you see a good big green candle, you can go for a buy position. It means that market has the volume. Okay. And I'm not saying that market will continue to uptrend, okay, but at least you can expect 40 pips, 35 40 pips. But 1785.86 is a big resistance. So as a result, if market reverses, you can consider taking a sell position. But in case DXY drops below 105 level and the sell continues on DXY, then obviously the resistance of 1785.86 will be gone. Okay, so this is what you need to follow before the news, before the NFP. And on the other hand, if market goes down also, so try to go for a buy at dip, considering the strong up move here. Listen to me carefully. Considering the strong up move here, so you should be looking for buy at dip. Buy at dip means you can use Fibonacci here. See, I'm using Fibonacci here, and as I can see, the market has almost respected the previous Fibonacci level of 23.6%. So as a result, high chance of market respecting the next Fibo also in case market starts coming down. So 1767 to 1765 is also a good support for the market from where you can expect the market to bounce. If market bounces from this level, 1767, 66, 65 level, you can definitely go for a buy position. In case this level fails, then the next support will be the Fibonacci 50%, that is 17, sorry, not 16, 1762. Yes. Okay, so if market goes down also, try to look for a buy at dip. It means try to look for a buy around 1762, try to look for a buy around 1765 if market bounces. Okay, considering the present scenario, okay, there's a high chance that if market goes for some correction also, we can expect the market to bounce. And if you can draw a flag like this, okay, if you can draw a flag like this, let me draw it for you. Okay, see, this also resembles a bullish flag here. Okay, so as you can see that I have drawn a flag. So if you're a lover of flag pattern, you can also draw a flag like this, and you can just wait for the market to go for a breakout. Okay, you can also take a buy position if market breaks the flag and starts moving up. But keep in mind, as long as market is trading between the flag, between the two lines here, okay, this is your no trading zone. In flag pattern, okay, this is this is considered as the no trading zone. So try to avoid taking any position as long as market is trading between these lines here. But to be honest, okay, to be honest, I will prefer to take trades on the levels that I mentioned at the starting of the video. It means taking a sell at 1785.86 if market reverses, or if market goes for a breakout above 1780, I can look for a buy. On the other hand, if market bounces from 1767 65 level, again I look for a buy, or 1762 I look for a buy. So we have got four opportunities. Out of those four opportunities, three are on the buy side, one is on the sell side. Let's wait and watch how the market reacts. Okay, and in case market reverses also from 1785.86 level, okay, be careful, observe the market carefully, because after a red candle you may see a green candle again. To be honest, okay, in this type of market scenario, for many years I have seen that market respects the resistance. Okay, so as a result, you will see market coming down for one or two candles, but again you will see market forming a green candle. So if you want to avoid such scenarios, what you can do is after 30-40 pips, you can book 40 to 50% of the profit and continue with the rest. Okay, that can also be done. Anyways, whatever you do, please follow proper risk management and do not gamble with your hard-earned money. As I always say, okay, capital protection should be your first priority always. And thanks a lot, thanks a ton for such overwhelming response to my workshop. Okay, that is starting today. Thank you so much. Bye bye. Take care.